morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's January 19th. We got a bit of economic news releases scheduled for today. Today will be the last day. Tomorrow, there's nothing scheduled, as tomorrow will be the inauguration day for newly elected President Trump. So let's jump right into it. We'll start off with the weekly jobless claims. We had 249,000 people apply for unemployment last week. Forecast this week was at 245,000. It came in at a much lower level at 234,000. So this is kind of we've had two weeks or so. We had 2 weeks in the 230 range, which is kind of showing us we're having a much stronger job market than we probably realized. So this is going to be obviously very good news here going forward here. And we'll have to kind of wait and see how this continues through the first 100 days as Trump implements his new policies and stuff. Also on the docket, we got the housing starts for the month of December. So we had previous reporting at 1.102 million. Forecast supposed to be at 1.2 million. And it exceeded that a little bit by 1.226 million. So good number right there. It jumped up from November to December approximately by 11%, which is obviously very good news right there. Building permits pretty much came in about expectations. So in November we had 1.212 million, and it came at 1.210 million. So just about 2,000 off. So we're within range right there, but pretty much in line. Philly Fed had a nice surprise here. We had a 19.7 back in December, and for the month of January, or this month, it was supposed to come up dropped a little bit, fall down to about 16, and it actually went the opposite direction at 23.6. So manufacturing in the Philadelphia region shows much improvement right there. Continued improvement actually. So 97 is a good number, and actually when you exceed that to 23.6 is also a very good number. So overall, very good numbers we're seeing here today on the data here. But stock market is down. Even earnings reports came in showing some positivity. Now there's some comments, dovish comments made by the ECB earlier today, and those are kind of what's kind of driving it down a little bit. We'll kind of get into it, but the dovish comments were basically saying that Mario Draghi was stating that he doesn't see any underlying inflationary trend increasing in Europe, so he is willing to continue or increase the quantum easing over there to create more inflationary pressures over there, which they're not really seeing. They're not seeing enough consistent inflation numbers to bring it up, and that's what he's trying to do, is increase inflation over in Europe. And so as a result, these dovish comments, because he's talking about kind of easing, it strengthened the dollar. So the yen and the euro dropped, and that increased or strengthened the dollar, which of course Trump was saying that too strong a dollar is not good because it makes our cost of goods more expensive when we try to sell overseas. So those weren't too good of news for us. Also, we got later tonight, will be after hours, will be Janet Yellen's giving a speech at Stanford today. Again, she made some comments yesterday, her speech yesterday, and basically along her speech yesterday, so I don't know if there'll be any surprises from what we heard yesterday to today, but basically she was just kind of saying that she's trying to normalize the interest rates, get to normalization. She's thinking by 2019, the Fed funds rate would be about 3%, so that means they would raise it a couple of times a year. This year they're expected 3 times, and that would basically bring prime up to 6%. So prime, so Fed funds plus 3% would be 6%. That gives you prime. So it gives you kind of indication as to where interest rates are. So if you got a home equity line of credit, it could easily bring you up to 8-9% range, as most equity line of credits now have a prime plus like around 2.5% or so. So that's where you would see your interest rates go if you carry a home equity line of credit. So just be a little cautious out there if you have those going forward, because within the next 2 years, you could easily see that go up dramatically, especially if it gets to the point where it becomes amortized and you're reaching that 10-year mark or so. All right, so let's take a look here at the bond market, and as you saw, we had a huge sell-off yesterday. So a lot of this money, you said the stock market's out, the bond market, as you can see, is down. So a lot of this money is actually going into the treasuries, 10-year treasury yield. So the 10-year treasury yield went up about 10 points yesterday. So it went from about 2.3 up to like 2.4 range on the 10-year treasury. So this is kind of where the investment dollars are kind of flowing to. Now, as you can see, this was a pretty steep one. We were down, I think it was 59 for the day. Right now we're down about 19 for the day, so of course worse pricing compared to yesterday, even when we left off, or even the day before. So we had a pretty big drop here. It's about nearly 80 basis points that we dropped, which is nearly 1 point in fees for that no point loan. So that's how big of a drop we've had these last 2 days. So hopefully we can find some stability here. The problem is we don't really have any foothold until we reach closer to this 101 level. There's really no clear position where we will just turn around. So the next strongest floor really is going to be right down here around the 101 right area. So before we were in about the 101.25, 101.30ish range here, as you can see here, before it took an upward turn. But again, even we were very fortunate with that. But the real foothold really is right around 101 here. So let's be very cautious here. We could see a little bit worsening here before we get some improvement. But right now, again, we're in that position where rates are rising. So just be a little cautious. All right, so it's a little higher today. If you guys want to get more information or throughout the day, any further data that comes up, I do post on Twitter. So just stop over to Twitter. You can find me under Mike Bjork and get your full day's worth of updates. All right, folks, have a great day. Sorry for the long video today. I hope you guys have a wonderful day. We'll look forward to seeing you guys tomorrow. Tomorrow will be obviously a short day because there's no data to give out, and basically we have inauguration day. All right, have a good day, and thanks again. We'll see you guys tomorrow.